Welcome to the Roy Morgan Weekly Update. The fourth week of the Albanese government was again dominated by continuing energy crisis issues impacting the east coast of Australia and the increasing inflation expectations fueled by Reserve Bank interest rate increases and promises that there might be more to come. So the weekly ANZ Roy Morgan Inflation Expectation Index increased 0.3% to 5.9% this week. Now that's the highest that this marker has been since March 27, when it hit 6.4%. And that was when petrol prices peaked. Just before that peak in petrol prices, the then Treasurer Josh Frydenberg cut the petrol excise and fuel prices then dropped by almost 50 cents per litre. And as you can see in the chart, immediately inflation expectations fell by over 1 percentage point. But since May, we've had just a gentle increase in inflation expectations. They've been on the rise. Now, these concerns about energy, the concerns about inflation and interest rates are obviously continuing to have an impact on the Roy Morgan key weekly indicators. The latest Roy Morgan poll shows support for the ALP government is down another percentage point. So we have Labor at 53% versus the LNP at 47%. The latest government confidence at 105 points is down 2 points. Now, that's the measure which we look at whether people think the country's going in the right direction or the wrong direction. And clearly above 100, more people think it's going in the right direction than the wrong direction. And although it's down 2 points in a week, that's still a lot higher than it was prior to the election, when it was sitting at around 80. And there's a little bit of better news too in the consumer confidence of Australians. The latest ANZ Roy Morgan Consumer Confidence Rating shows an increase of 1.3 points to 81.7. And that comes after 3 straight weekly falls, including, you might remember, a major collapse last week of 6.6 points. So although consumer confidence is still below that magic 100, where we have equal amounts of optimism and pessimism, we're still below that, it finally appears to have bottomed out. Now, this chart illustrates, and we've been looking at this quite closely each week, where consumer confidence has dropped most during the 8 weeks since the ABS released that higher than expected CPI and the interest rate started to increase. And what we've seen is the people most affected are those paying a mortgage, and they're now down around 24 points since that late April estimate. Now, these results are really important. It's worth looking at the impact on mortgagees, on people with mortgages and the mortgage market in general. It's a huge market. So if we look at mortgage stress, and this chart actually shows mortgage stress over time, and on the far right there, we see in the March quarter of 2022, before there were any interest rate increases, and when inflation was just starting to take off, there were an estimated 762,000 Australians, or 17.5% of all people with a mortgage, that were at risk of being in mortgage stress. 10.7% were at serious risk of mortgage stress. Since that time, of course, we all know the Reserve Bank's commenced an interest rate increasing cycle. They've now increased interest rates in the last 2 months by a total of 0.75%. And that is, as you probably know, the largest increase to interest rates in a 2-month period since 1994, nearly 3 decades ago. And the Reserve Bank is expected to continue to increase interest rates, probably 0.5% in each of the next 2 months. So this chart helps us understand that if the RBA were to follow through with those interest rate increases and everything else pretty much stayed the same, that would increase mortgage stress to 19.4% of all people with a mortgage, or 843,000 people with a mortgage, an extra 81,000. So if we look back at the historical perspective, we see that even at 19.5%, it's nowhere near the highs that we saw around the global financial crisis, when we had 35.6% of mortgage holders at risk of mortgage stress, at risk of being unable to pay their mortgage, more than 1 in 3. So at 19.5%, it's not a good number. You don't want anyone to be in mortgage stress, but it's nowhere near the highs that we've lived through before. So thank you for listening. I look forward to joining you next week when we'll have the latest data on inflation expectation, consumer confidence, and voting intentions. And next week, I'd also like to explore this really interesting conundrum that we're seeing at the moment, where Australians are keeping on spending. We're spending and spending and spending, despite this very low level of consumer confidence. And there are some reasons behind that. I look forward to you joining me next week.